Joined by Mo Chaudhury, an associate professor of finance at McGill University. Thank you so much, Professor, for being with us on the program. First off, help our viewers understand what's happening with this banking sector and how we got to this point, and do we face a risk of witnessing a banking collapse?
Thank you very much for inviting me and allowing me to share my thoughts. To see how it developed in a nutshell, there was a lack of diversification in many of the banks that have now either has been taken over by the regulators or are in deep financial trouble, like SVB, like First Republic, like Signature Bank, which has gone down. Their customer base was way less diversified than large banks.
Hmm.
So, for example, for SVB, they were mainly startups. So we know that diversification generally means that putting your eggs in different baskets. Now, the number of baskets have to be large, and also the baskets need to be different. Means when you're lending or your client base,
Hmm.
preferably they should be in different industries, so that if one industry or one sector is not doing well, you still have other sectors doing reasonably okay. And as a result, your assets and profitability are not affected that much. So many of these
Right.
banks have had that problem, that
Right.
number of clients were not as many as large banks, and they were concentrated in specific sectors.
Right. We're seeing a significant amount of money being given to these banks. Do you think that will help strengthen liquidity? What needs to be done moving forward?
Well, it's a good thing that the regulators and central banks are stepping in. Uh, but in my view, this is just kicking the can down the road. It is going to temporarily arrest the contagion of bank run. Means that in the near future we may not see um, too many other banks
Hmm.
going through um, massive withdrawals in a short period of time. So this might be helpful.
Hmm.
However, it does not address the fundamental banking problems uh, that have besieged banks like these. Now, I want to mention that Credit Suisse is a different story. Credit Suisse, unlike these other US banks which are going through trouble, is a large, systemically important bank.
Right.
Credit Suisse, Credit Suisse problems um, are more like corruption,
Hmm.
uh, not revealing proper risk assessments, inadequate supervision by the regulators, and internal controls, which is different from
Right.
what we have seen in
But
the
there is
US.
one thing in common between Credit Suisse and the banks in the U.S. is that investors and their money are at stake here. Do you think that they've lost confidence in the banking system? Could we see their clients invest their money differently moving forward?
Well, I think the action by the Swiss central bank in Switzerland and Federal Reserve and Federal Deposit Insurance Corporation in the US will help restore confidence. In addition, uh, it is wonderful to see big US banks like JP Morgan, Citi, Wells Fargo stepping in
Hmm.
and try to restore confidence by announcing um, facilities or cooperation with the problem banks, so that the problem banks have access to capital, which is very much needed right now.
All right, Professor Mo Chaudhury, thank you so much for joining us here on TRT World and sharing that insight with us.
Thank you very much for allowing me to be here.